Ladies and gentlemen, welcome to the August 2025 data review on my favorite day trading strategy, the HPT cross. Now, this is a very special data review because we started this strategy exactly a year ago. And dude, I'm telling you, time flies extremely. And if I've learned anything from this study, this year-long data review, it's the importance of trading one strategy. Okay, so before I really modified and tailored this approach, I was struggling with strategy hopping. Okay, I would trade, random chart patterns, whatever was in front of me, supply and demand, breakouts, orb, right? Which are all really good strategies, but they're lacking consistency, not because the strategies don't work, but because my inability to follow one. So what I decided to do was set out, craft a strategy that fit me, my personality, my day trading strategy. And this is what I present to you guys, okay? Don't just take my word or anyone else's word. Figure out what actually works for you, okay? So what you're gonna see in this video is what worked for me, what continuously works for me and my team, in the data to back it up, okay? So before you're gonna see what I like to call a high-level summary, and is a very simple but specific and clear breakdown of the strategy. Okay, so you'll see up here the month that we're testing, August. The win rate, 76% this month, really good. And then below is the required specifications. Okay, now this is the important part. We have to be very clear on what it is we need to see that actually makes us pull the trigger. Okay, this is what I call redefining your approach. Okay, you need to define what criteria needs to be present for you to actually pull the trigger. Okay, we can't just listen to our gut. We can't just go off emotion. We want data-driven decisions. That is key. That is what we do over here at HPT, and that is exactly what we're about to break down. So that criteria that I look for every single day is very simple. It's 3 steps. Okay, number 1, it's off a critical level. These are key levels. I call them pit numbers, okay? This is previous day high, previous day low, previous day open, previous day close. And then there's one more, which is open print, okay? So before you're gonna see, this is open print. This is the 9:30 bell candle. What I get a lot of questions about open print, and I'm about to debunk all of them, okay? When the market opens, you identify the open of that candle, okay? That's going to be 61725. That is open print, okay? Number 2, first step is identify the open. Number 2 is you identify the moving average cross, okay? This is very important because men lie, women lie, moving averages do not, okay? If a moving average is crossing, it's because a specific side of the market is more dominant, okay? The market has shifted. This is something that works extremely well. It helps you stay patient until a move is actually happening. And then once a move is happening, you know which way to trade, okay? Moving average crosses, they might be simple, but do not underestimate them. They are highly effective because they're clear and they're reliable, okay? So that's step number 2, moving average cross. Step number 3 is identifying the entry criteria, all right? It's the most important part and it's very simple, but you got to make sure you understand it, so pay attention. The RBI or GBI, you're going to see right here, this is an RBI, this red candle. It's an RBI because it is a red bar that got disrespected or ignored, okay? The acronym RBI, red bar ignored, okay? It's very effective, it's very clear, and it tells me exactly where to get in and exactly where to stop out. 2 of the most important components to becoming a successful day trader is knowing when to get in a trade and when to get out of a trade. And the RBI, GBI process breaks down both of them. So at that point, the next candle, when it disrespects that RBI, okay, it breaks it even if it's by 1 penny, I'm entering into the market long, I'm targeting my upside target, and my stop loss goes, I'll make it yellow, right below the candle that was ignored. That is our 3-step approach. One more required specification is that all these trades happen before noon. Okay, so once again, open print, moving average cross, RBI, GBI. We're gonna before noon. We're gonna trade this every single day for a year straight and collect data. And this is exactly what we've gotten. So for the month of August, we've taken 21 trades, 16 wins, 5 losses, 76.19% win ratio. And know what the crazy part about all this is? That's exactly what to expect. Okay, see, data, large numbers, all right? These are things that are governed by principles, all right? Not by emotion or not by human, thoughts or, behavior, right? Principles are going to repeat, okay? Principles like gravity. Gravity is a principle. Principles like the law of polarity, okay? How hot things get is how cold things get, all right? Newton's third law, okay? For every action, there's an equal and opposite reaction, okay? These are scientific principles, but there's also mathematical principles, one of them being the law of large numbers. The most beautiful part about the law of large numbers is over a span of time or a given study, you're going to identify patterns in whatever it is you're measuring. That's such a beautiful thing for us day traders, okay? Because what we've come to realize is no matter how many trades we take, okay, over a year, we're hovering around that 80% win ratio, all right? You can see here last year when we started this, in the month of September, we had a 77% win ratio. Well, go figure, this year we're sitting at a 76, okay? So once again, not to get too off the deep end here, data is reliable. Your emotions are not, okay? Data is repeatable. Your behavioral patterns aren't always, okay? So what we've done here is learn to trust the data instead of our emotions and execute in the market, okay? So that's where we're currently sitting over a year, right there on that 80% win ratio. So with all that being said, let's now break into the last week in the trades that we took, okay? So it's currently August. It's the last week of August, and I'm not going to lie to you guys, these markets have been extremely challenging, crazy volatile, and super choppy. I mean, look at this day right here. This was absolute garbage, okay? Now, yes, it is garbage, but our edge still presented, okay? You can see here we got open print. We have a red candle that was ignored, so we draw a box around it. This is what we call the area of value, okay? So basically what that means is anytime price comes into this box, there's potential for opportunity, okay? So once again, how you would trade this is you would enter into the market long and you would put your stop loss below the ignored candle and you would ride this out until your target, which would be up here at EOD, and you would stop out right below the area of value, which would be down here. And you could see if you stuck to the criteria here, you would have landed yourself in a successful trade. Okay, next day. Once again, super choppy market, okay? There's no moving average cross here, so there really is no entry criteria. And up until right here, we finally get ourselves a moving average cross, but there's no GBI, all right? We're looking for a moving average cross followed by a green bar to get ignored. Maybe if we got ourselves a red candle right here, ignoring that candle, it would have been good entry criteria, but we did not. Okay, we ended up getting another moving average cross off these critical levels. Okay, these dotted lines are end of day and previous day low. And then we get this, I'll make it in yellow, this red candle right here that gets ignored. So that's our long entry. Our stop would go right below the red candle, risking 1 bar. Okay, see, we're never risking more than 1 5-minute candle, ever. That's the beauty. Okay, if you're risking 1 bar, but on your profitable trade, you're making 2 bars, 3 bars, 4 bars, 5 bars, sometimes way more bars. That, my friend, is the most simple way to become a consistently profitable trader. See, if you're not making money consistently, it's because you're not stopping out where you're supposed to. You're taking on too much risk or you're not making enough money, okay? Maybe you're risking 1 candle to make 1 candle. Maybe you're risking 10 candles to make 1 candle. You got to ask yourself, everybody has a system. Which system are you actually following, okay? This is one of the systems that I teach over here at the High Performance Trader, and it helps traders tremendously, okay? Once again, the reason you're not making money is because you do not have a simple system to follow, okay? It's got to be simple. If it's not simple, how are you going to be able to execute it appropriately when money is on the line, okay? When money's on the line, there's a lot of emotion, okay? And it's not always easy to see things clear. This is why I love the RBI, GBI entry criteria, because guys, I'm only ever risking 1 candle, okay? So 8/27/2025, this once again, just beautiful textbook trading right here, but once again, we're just following our system. Okay, see, it's easy to look at a trade here and go, yeah, okay, you went long and up into all-time high. Okay, cool. But once again, guys, the only information we really had was this right here. Okay, market opened up, and we literally, like, it looked like this when we entered into the market. This is exactly what it looked like. This is all the information I need, though. Okay, once again, we literally have open print. Open print is right here. All right, so we're trading off a critical level. Step number 2 is the moving average cross. Okay, so we're literally getting this very large red candle here, followed by this green candle, which completely ignores that candle. Okay, so red candle, draw the box around it. Oh, I'll get it right. Ready? Red candle right here, draw the box around it. We broke it by at least 1 penny. Therefore, we are in the market long. And you can see here that led to that moving average cross, causing price to give us another red candle that was ignored. Notice, we never broke our stop. Our stop loss goes directly below the initial candle that was ignored. Okay, this right here, that's the initial candle that was disrespected, leading to the entry, followed by the stop loss right below it, and price continues to cook all the way up until our target. So once again, we all have some sort of system to get in and out of the market, even if you don't think you have one. You not having a system is an unprofitable system, okay? Everything in life is a system. Your car has a system, okay? If you decided to take a vital part out of your engine today, maybe your catalytic converter, your car would not operate appropriately, okay? Your health is a system, okay? If you're out of weight or if you're in shape, you are either following a healthy system or a unhealthy system, okay? No matter what, you have a system. You have to ask yourself, is it actually serving you, and is it easy to implement? Does it align with your goals, okay? Here's another trade right here. Once again, we have a crazy morning. There's no opportunity here. Very large sell-off here off open print. Very far extended, no critical level. Okay, now we get ourselves a beautiful moving average cross right here, followed by a red candle that was ignored. Take the market long, capturing a nice little pop up into those critical levels. Okay, we didn't take this trade because it was too close to the target, but once again, that's completely fine. We still understood the context of the market. Okay, so no matter what, you're always going to benefit once you start to view the market this way. Okay, it's all about understanding the story. All right, and then the last trade right here, we actually took this live because we go live every Friday on YouTube, and it was beautiful criteria. I mean, flawless. It's very simple. And shout out to everybody that was with us that traded this live. Quick breakdown: open print. Step number 1. Step number 2: identify the moving average cross. Step number 3: identify the RBI, GBI entry criteria. There it is. Once we snap that previous candle, we enter into the market short, and our stop loss goes right above the ignored candle, capturing a beautiful, beautiful move to the downside. I mean, this was flawless. We took it down to previous day low, clearing it. I think we made around 70% ROI on this trade. Okay, once again, guys, you need a way to determine that the market's healthy. If I learned anything this week, it's that you do not want to participate when the market's unhealthy, okay? And you do want to participate. You want to make sure you're actually capitalizing on a whole nother level when the market is healthy, okay? Now, I'm not telling you to use my strategy. I'm just telling you what worked for me, okay? Stop strategy hopping. The day I stopped doing that is the day everything really started to shift for me. And then it's funny, once you stop strategy hopping, you're like, dude, why was I doing that, right? Like, that's definitely not the way to make it in this game, right? Like, you need a simple way, though, to objectively identify good opportunity. And that's what the HPT cross gives to you. So, like I said, guys, click that link in my bio if you actually want these data reports emailed to you. I send them out weekly, okay? Because I know how valuable the data is and what it's done for me and my team. And that's something I would want to give you. Okay? So, guys, I appreciate you being here with me throughout this year's study. It was very beneficial. and I'm definitely interested to know what you've learned from it. If you have learned anything, any comments, concerns, any new study you want me to do, drop it below, and I will definitely take it in consideration, because collecting data is the best thing in the world to do. I love you guys. I'll see you in the next lesson.